And the trend is Bitcoin is the dominant digital monetary network. There's not going to be a competitor for that role. And is it going to be hacked? Is it going to be copied? Is it going to be banned? It's been copied 10,000 times. It's the winner. It hasn't been hacked. Everything else has been hacked. Bitcoin has been very stable and robust. Will it be banned? It's not being banned. Fundamentally, we're looking at the fundamentals. And the fundamentals in the last 2 years are the president supports Bitcoin, the vice president supports Bitcoin, the head of the Fed supports Bitcoin, the head of the Treasury, the head of the SEC, the head of the CFTC. The accounting rules have been improved to Bitcoin's benefits. The tax laws have been improved to Bitcoin's benefit. The regulations have been improved to Bitcoin benefit. No bank was supporting Bitcoin 2 years ago. Now you've got 75% of the major banks starting to support Bitcoin. There were no ETFs 2 years ago. Now there's 100 of them, and they have $100 billion plus of capital. And so there was no digital credit, and there was no bank credit on Bitcoin. Now there is. Meanwhile, we've gone through a halving. We're 2 years from another halving. So the fundamentals are much better. The support of the capital markets is much better. The support of the crypto markets and the bankers is much better. The competition is weaker. Bitcoin dominance was 41% in 2021. Yeah. That is 41% of all the crypto market cap was Bitcoin. In fact, it had been 70% and it fell to 41%. And people thought there's going to be a flippening and maybe, and so, maybe Bitcoin's not the right network. And now Bitcoin dominance has returned to about almost 70%, 68% plus over those 5 years. It's a very unmistakable trend. So I think 2026 is a great year because 2026 is the year where Bitcoin emerged as consensus global digital capital, and no one really disputes that anymore. The banks know they have to support it. The governments know they have to support it. I think this is the year that digital credit emerged as a real asset class. It's now more than $11 billion. 12 months ago, it was $0. There was nothing. The entire asset was invented in the past 12 months, and it's been extraordinarily successful, growing very rapidly. And that is one of the killer apps on top of Bitcoin. Digital credit is what allowed us to buy 175,000 Bitcoin this year in the middle of a bear market. So digital credit is meaningful driver of the marketplace right now and supporter of the network. And then the third thing that's just really exciting is now we can see a path to plug Bitcoin into every bank, every money market, and every investor in the world through digital money. People used to dream a decade ago, they dreamed about a Bitcoin-backed stablecoin, and wouldn't it be great if I had a coin like Tether, but it paid me 8% or 6% or whatever, and no one could ever create one in one hop. You couldn't go from Bitcoin directly to the stablecoin because Bitcoin was too volatile. And what we found with digital credit is if we go from Bitcoin, which is like 40 vol and 40 AR, to a credit instrument, which is like 5 vol and 10 or 12 yield, then the third step of getting to 0 vol and 5 to 10% yield, that's the money step, or a digital currency that pays a yield that's pegged to a fiat currency. That's an extraordinary thing, and you're starting to see entrepreneurs starting to work to create digital money that's pegged to fiat currencies backed by Bitcoin in the entire crypto ecosystem right now. That's more like a $1 billion segment. Yeah. But, so Bitcoin's $1 trillion, digital credit's 10 billion, 11 billion, and this money is one. But that's the holy trinity, in my opinion, because if you can put together capital, credit, and money, then there's no reason why you can't tap into trillions and trillions of dollars of opportunity. And that would be interesting to everybody in the world, every investor in the world, and every jurisdiction. So for me, there's the near-term chaos of, there's a bear market, and there's a lot of people tweeting and a lot of other people about stuff. But the fundamentals of the industry are Bitcoin is digital capital, digital credit is working, and the next exciting chapter in this entire story is the formation of digital money.
If we talk about like the near term, I think that the opportunity is really clear. And even if we walk around at this conference, there's so many people coming here as the Bitcoin community, and it's just expanding and expanding. But why is it that if we have consumer sentiment being so low and the S&Ps being at all-time highs, that just Bitcoin is the asset that is lagging behind everything?
Right now, the dynamic in the capital markets is you can think of Bitcoin as like risk capital squared. So normally things that are good for risk are really good for Bitcoin. Like if interest rates drop suddenly, and things that are bad for risk are really bad for Bitcoin. The difference between equity capital and digital capital is right now the equity capital markets are bifurcating into the winners, the AI companies, the SpaceX's, the Googles, the OpenAIs, the Anthropics, the Microsoft, companies that are digital monopolies with a distribution channel of 1 billion people that have that tech. And they're like $1 trillion companies, right? So if you look at the S&P, it's like, well, you've got like those $1 trillion companies, and then you've got the have-nots, which are hotel chains and airlines and retailers and traditional cash cows, and even software companies, traditional software as a service companies. Investors are looking at those and saying, well, those are all not growth businesses or their targets. And so there's an AI bubble. And we're living right now in the summer of the AI bubble or AI boom. $500 billion of capital is being slurped into the AI complex right now. Google's raising $80 billion. SpaceX has got the SpaceX IPO is the biggest IPO in the history of the world.
It's actually happening right now as we speak.
Yeah. And so when you have SpaceX saying we want 80 billion, and Anthropic wants 80 billion, and OpenAI wants 80 billion, and Google wants 80 billion, and all of a sudden Amazon's like, yeah, well, we want 20, 30 billion, and then Meta's like, well, we think we may want 30, 40 billion. That's the public stuff in the equity market, and then behind the scenes, they're all pulling in hundreds of billions of dollars of private credit to fund these data centers. So what you have is a AI-driven black hole. It's orbiting through the capital solar system, massive gravitational pull. It's pulling credit money. It's pulling equity money. It turns out that it has pulled 10, 15, 20 billion dollars of capital out of the crypto economy. Institutional investors have sold 5 to 10 billion dollars of ETFs and things like that. So it's pulling some capital, but of course Bitcoin is not funding all of this. Bitcoin is like 2% or 3% of the capital. That capital is being pulled into these hot deals. Every banker on Wall Street is out marketing the SpaceX deal, marketing the Anthropic deal. And so then the capital investors think, well, I'll take my mature money that's been invested in the same business idea for 3 years, 5 years. Let's roll it into this hot new deal. Let's get in on it. I know I'm going to get a 10 or 20% pop. Because the bankers, if they're going to do the deal, they're going to have to make the deal pop 10 or 20%. So I'm going to get in on the deal, and then I'll get out again. And so I think capital is being pulled into all these hot deals. They're all competing for capital. When we get through, IPO summer or AI summer, I think a lot of that hot money will come back into Bitcoin because Bitcoin is now undervalued. If you want to look at Bitcoin, you can look at the premium or discount to the 200-week moving average, which is kind of like the book value of Bitcoin, or you look at the realized price, and what you can see is when the market's hot, it trades at 100% to 200% premium, and then when the market chills and the leverage comes out, it trades at that number or maybe at a slight discount. And so what you're seeing right now is this capital cycle. The more Bitcoin, has capital drain out of it, the more compelling the price is, the better the value. At some point, those capital investors they're not maximalist in anything. They're not religious ideologues. They can be excited about this deal this week. They'll be excited about another asset next week. And they're all looking at relative value. So I think that equity markets have been performing well because they've been juiced by NVIDIA and Google and some of the AI story. And Bitcoin hasn't been getting that lift. But I think that after these deals flow and after capital settles, I think that a lot of the capital will flow back into the Bitcoin and Bitcoin-related securities. Probably the third quarter, and I think by the fourth quarter, things will be normalizing to our benefit. You would say, this is something everybody needs, nobody can stop. Most people don't understand, but that puts it in the category of Amazon in the year 2010 or Apple in the year 2012, 2010. If you would ask a conventional investor, does home delivery Amazon network, does it make sense for a retailer? They all would have told you no. It's an awful business. It's going to fail. We don't need it. I don't get it. I'm not going to buy it. It was 10 years. After it was short, after fundamentally you could conclude that it was unstoppable, there was no company on earth that could compete with Amazon in 2010. If you were honest, it took 10 years before conventional wisdom was, of course we need Amazon. And with Apple, they created the iPhone, and by the iPhone 3 or the iPhone 5, there's a famous video of me speaking about Apple in 2012, and it's like the iPhone 4 or iPhone 5. I said, it's very clear there's going to be 1 billion people with this device. They're going to sell another one every other year. It's impossible to stop. It's jewelry. It's going to be one of the great consumer products of the world. And they're going to have, this monopoly on a consumer network of 1 billion people and be able to control all the software and every service that goes to 1 billion people. This is going to be a great company. Conventional wisdom disagreed. Everybody thought I'm crazy. And for 8 years, people disagreed. And there was a point after it was probably 7 years later that people all of a sudden go, oh, yeah, I guess Apple's a good business. And so with digital monopolies and digital networks, normally the network forms to the point where it's globally unstoppable. And it's obvious if you're a tech early investor or if you're an early adopter, you're like, well, this is definitely the thing. This is going to win. But 99% of the money in the world, the conventional thinkers, they just disagree with you and they won't get it until they're beat over the head with it. The point when Warren Buffett didn't buy a tech stock and he's like, oh yeah, I guess we'll buy $50 billion of Apple and Apple double. It's like, well, we'll have that Warren Buffett moment with Bitcoin. Not this year, maybe not next year. It doesn't matter. The point really is, does the world need a non-sovereign digital store of value bearer instrument that is deflationary in order to preserve economic wealth? Of course it does. Ask anybody that's ever had all their money stolen from them anywhere in the world by a hostile government whether or not they would like to keep their money. So the people that are here at this conference, the hardcore Bitcoiners, they get it. I think it's found a place, and you're in the middle of a painful drawdown. It's not as brutal as 2022, but it's not pleasant. But at the end of the day, you've got a war. The war will eventually end. You've got a very flat and high yield curve, a very restrictive monetary policy. Eventually, the short end of the yield curve will come in, and we'll have a more accommodating monetary policy, and we'll get a tailwind from macro. And we've got a massive AI black hole spinning through the system. And eventually the capital markets will come to terms with that. We'll hit an equilibrium, and then the capital will balance itself back out in a rational, risk-adjusted, diversified fashion. And that means a lot of capital will flow back into Bitcoin.